Hello, everyone. Welcome back to the rationalinvestor.co. My name is Brian. I am the rational investor, I suppose. And I thought I'd do a little follow-up video here for our audience. And frankly, I'm actually quite surprised. We're up to close to 1,300 followers. So quite an audience here on Twitter. And I did a little piece on Bitcoin symmetry here this morning on Twitter, and I thought, oh, what the heck? Why don't we do a 5-10 minute video? Any long-time watchers of my videos will find the humor in that statement. But here, let's give it a try. It's now quarter to the hour. If I look down and I see that it's past the hour, I'm just going to cut myself off. So just a fun free video for everybody on a Saturday morning, just to sort of review what I'm sort of seeing here. So I tweeted out this chart today. And I think, I distinctly remember at the beginning of the year making videos and talking to school people and stuff about how it sure looked to me like 2015 was just going to be a big hurry up and do nothing. Let's go off on a tangent here just for a moment for the public. Where are we here? Let's do this one here. I don't, on balance, I find it extremely hard to believe that Bitcoin itself as a commodity proxy is really going to outperform when assets of all flavors are just getting ripped apart here, right? The leading commodity of them all, oil, is still making new lows now. So that means ultimately we're probably going to see just general anti-commodityness in the market for a while. And I like to really follow this this sort of like it's a market-based inflation gauge, which I like. I really don't like listening to some sort of talking bureaucrat telling me what's the actual reality of inflation and deflation in the market. And so as a result, I like to follow this simple market-based proxy where there is a U.S. Treasury bond that you can buy that has an inflation protection. Obviously, that inflation protection is going to cost you, right? And then there is the straight U.S. Treasury that has no inflation protection, and there's no additional cost. So long and short of it here is if the TIPS, the inflation protected notes, are trading at a premium to the non-inflation protected notes, then it implies that investors feel as though there is inflation out there and that inflation is worth paying for. Remember, nothing in this life is for free, right? And normally, under normal conditions, the TIPS trade at a nice healthy premium to the TLTs. That's just sort of normal conditions. Since our 2008 financial crisis, and this doesn't really go that far back, this is just the past couple of years, but since the financial crisis, this relationship's actually gone into a deflationary spiral. In essence, the TIPS, right, are trading at a discount to the bonds, right, and that's this legend over here. It's a negative number. And so as a result, we actually have our bigger concern should be deflation, not inflation. We had a little bit of a bottom come into the inflation picture, and we had a bit of a rally in Bitcoin through the normal seasonal window, and that actually went on through into the summer. And it's very interesting how Bitcoin topped out last summer, just about this around mid-July or so. The Bitcoin peak last year was early June. So there is the July peak, and as you can see, we've sort of rolled over here in the face, of course, of all these other commodities just getting smashed, right? But the real market message here is this relationship between the TIPS TLT spread, or inflation deflation gauge. It actually had been pushing towards inflation as the US dollar was topping out here. And unfortunately, as you can see, I pointed out here, this nasty failure here, deflation has come back into the picture. And like I said, the commodity prices themselves are just collapsing. This is a really interesting battle because, of course, this was a harmonic failure up in here. And then, of course, we have this nice little double bottom here. I'm actually looking for the US dollar to get up into this area here, which would set up a nice Gartley pattern for a wicked fail. So maybe as the US dollar works its way up into there, that's how this inflation deflation gauge comes back down to these original bottoms and starts to put in, our nice W's, what we look for. Unfortunately, this M is dominating right now. So as a result, the commodity markets, everything, everything is very soft right now. So that brings me to sort of today's what I really wanted to sort of talk to you guys about. I posted this chart. This is basically Bitcoin year to date. There's January 1st. Big dump right out of the gate. Big counter trend rally right back into basically the original top. And then just an establishment of a trading range. We had a bearish market structure up top here, which set up a short if you wanted to trade this, and a bullish market structure here, which set up a long if you wanted to trade that. Regular viewers of me know that I'm not really the biggest fan of shorting, and if I was going to short something, I like to do it through the options market, be long options. So as a result, I didn't really do anything through this, but we did have a couple pretty good long trades through here. Silly Bitcoin antics from these exchanges limited the gains, but nonetheless, we made money. Can't complain. Kind of disappointed. We're looking at Phoenix, and some people might go, "Oh yeah, but Phoenix, their New York Bitcoin license and all that kind of nonsense. Are they even relevant anymore?" I don't know. I just picked Bitcoin Phoenix. I did sort of the same thing on Stamp here. So, but I already, and basically it's the same kind of message. So I've already done the write up, and the tweet was on Phoenix, so that's why I'm looking at this. Something that really jumped out at me when I saw us working down here through this was just how incredibly orderly this is. And I had done a tweet on a little altcoin back in the winter, IOC, I think it was. And it had an incredible market symmetry. And, since I did that tweet, I've sort of been keeping market symmetry out of the corner of my eye all the time here, just because I noticed, and it might have to do with the sort of crypto-ness of all these assets, that they actually have to obey a lot of sort of universal harmonic laws. And market symmetry is often, considered sort of a universal harmonic law. Fact, in the tweet that I did, I made reference to this fractal image. I don't know whether you guys can see that. Hopefully you can blow that image up. And this is a saved image on my computer. So, this image here is the trading view image. So I can't show you this through the browser. I suppose I could, but it would take me a minute. Anyway, the point here is this is a fractal image that I've been noticing in the market quite a bit over the past sort of 10, 15 years. And there's a second sort of corresponding pattern to it. And so there was a person on the internet that actually found where this image came from. And it actually comes from guys who are trying to study the randomness of quantum mechanics. And it actually, and they used sort of the billiards analogy that, if you hit a billiard ball, it told what are the random destinations of all the different billiard balls. And this pattern pops up quite a bit. And it's interesting how you look at good old Bitcoin's price pattern. Sure looks awfully similar, eh? It's almost freaky how this stuff happens. And that's why I said with crypto, because it is, basically totally mathematic. There are nuances from exchange to exchange, but like I said, you basically see this image right across the entire spectrum, whether it be Bitfinex, and in this case, I also happen to have it here on Bitstamp. It's not quite the same, but nonetheless, you can sort of still see that fractally type image. So, long and short of all this is, What I believe for 2015 is that it was nothing more than a trading range year, which is good. I mean, these percentage moves are kind of gut wrenching for spectators on the sideline. But in my opinion, this is very good and this is very healthy, and it's what needs to happen in order to be able to set up another one of these face rips up, right? They took almost a full year just to wash out all that excessive. And now all we're doing is simply forming some sort of base in the market. Ideally, of course, what you'd like to see is nice solid tests of these lows and bullish rejection of these tests, and then ultimately nice big juicy closes up in this area, and then you'll know sort of Bitcoin is off to the races. Back in the spring, we had set up this very interesting double bottom. And I actually, people in my education program actually took long trades down here. I was so proud of them. Some of these guys that have taken my school programs, oh my God, they're just beautiful traders. I came late to the party and I bought on this double bottom here. I also bought another little sort of what we call trend continuation setup, my bot setup, and played that as well. But there were students of mine that actually took these longs down here, so I was so proud of them. Conversely, I think we do have quite a few people in the community that are short. I know there are some bottom hunters, but frankly speaking, what I've noticed with Bitcoin is I don't think it really pays to be a hero. If I see a double bottom come in and then a run up and then a pullback and then some nice bullish confirmation, I might take the shot. But this isn't really the best trade location regardless. If we consider things like fibs, if we look at say like OKCoin, if we take our fib off of these lows, right, which is basically the same thing. This is what I like to call the reload zone. It's the zone between the 61.8 or our mountain man level and the 78.6 fib, or what I like to call the line in the sand. This midpoint is often a really good reference point. You'll notice that if we look at this entire action on OKCoin off the 4-hour, the point of control, or where the most volume that's actually traded, is sitting down here at $235. As well, you can see a trend line off of these lows, which corresponds nicely with this double bottom. It seems to also want to come in somewhere in there. So if I'm hunting setups, I think I'm just going to just kick back and relax and wait for a nice move back down into the original bottom. But at the same time, Bitcoin's notorious for these big, I like to call them FU moves, right? We've gone through a period of relative quiet, and I noticed that sort of the community is kind of very quiet right now. And I remember last summer when the community went really quiet, it was setting up for a big face smack, right? Let's see, can I zoom out there? I noticed through last August, here's August right in here, right? You can almost see sort of the same thing where they brought market down into sort of a buying zone. They set it up, and I remember sitting there, and you can go back and look on my tweets. It's like, oh boy, this is trouble, because things just went really, really quiet. So kind of seeing the same thing here. The market symmetry itself, basically duplicating this action over here. And this is pretty darn volatile, eh? This is no reason why this can't happen again. If I'm not quite sure why, but this charting library, when you do these market symmetry studies, the scale isn't quite correct. Obviously, this low should be down here, and these highs should be. Well, you can see I've sort of skewed it a little bit. That's where it should have started, but it should have gone down to at least down here. But anyway, here nor there, it's not that really big of a deal. Point here is at the moment, right? somebody tweeted earlier today, and I retweeted it. I thought it was so good. Professor Steve Hanke, not quite sure who he is, but he sure looks like a smart guy. He tweeted out this, and I retweeted it, this just view of what Asia looks like right now. And again, my sort of students in my programs will clearly see the bearish market structures all over the place here. And of course, we've been chit-chatting about China for quite a bit lately. I still think China could go lower to get even down into what I would consider a buying window. And my response was, what did I say? I said they don't call it the fall for nothing. Right? And really, my question to you guys in the community and anybody who's really watching this is, does it really make sense that Bitcoin, and just another asset out there, is going to rally in the face of everything else melting down? My general feeling is there's no need to be a hero here, right? We were just looking at that. If setups come in, where would I like them to come in? I think that, if you're going to take a shot on the long side, I like this area down in here. And you kind of have to risk, just basically respect this double bottom here and probably risk down into here. So you're going to take maybe like 15, 20 bucks risk on the trade, looking for a retest of the highs, which are, about 50, 60 bucks away. I don't know whether I like the risk reward in here. I just, it's a tough one. I think, frankly speaking, I don't need to be a hero here, and considering what's ahead of us, I just don't think it makes a lot of sense. So, just to finish off this video, because I see it's 10 o'clock now, it's 15 minutes. My hunch is, maybe a double bottom comes in here and we rally up, and if that's the case and we come down and test these lows again, we might, if volume and momentum look good, then we might set up some sort of trade. I personally am not going to be a hero and step in on the long side through September, October. They're historically very dangerous times of the year. And generally speaking, asset prices fall. I just simply wanted to give you an idea of what, and sort of a verbal backup of what it is that I'm looking for over the next, month or two. And I find it really interesting how this market symmetry seems to have played itself out nicely here. All right, so I hope that helps. And, by all means, if you are interested in sort of learning how I approach the market and how you can sort of set yourself up to trade like a business and hold yourself accountable to your actions and, set yourself up for success trading, feel free to inquire about our new school term program coming up here in September. And other than that, have yourselves a great day. Good luck in the market, and hope you all stick to your trading plans. Talk to you soon. Bye for now.